see what happens. Um, Steve, good morning. No, so I've got this thing, guys, where, and I don't know why. If I can't see this, it just feels weird, and I don't know why. I don't have any reasoning, but this was all black, so I couldn't see that you guys were here, and I couldn't see what I was showing on screen, and I think I'm just a creature of habit, um, which is very possible. Good morning, Bob. Good to see you, man. Ron's taping up his camera. We should do that. Everybody just turn your camera on. You can see my bedhead. Not touching it, Ron. Guys, let's check news. What did news do this morning? Anything? What is today? Today's Thursday, right? So Thursday, all day, OPEC meetings. We've seen this before. It's medium impact all day. What does that mean? It goes, just be aware. Trade your patterns, protect your positions. May not be a home run day. It might be a home run day. Who knows? Just trade your plan, guys. At 8:30 a.m. we had unemployment claims. But at 10 a.m. we do have ISM services. High impact again. Could create. Yeah, Ron, you remember. Well, the one day that it was so bad is it was high impact. The OPEC meetings were high impact. They were anticipating something. And everybody in this room got blown out in crude oil. And I'm like, guys, you saw that it was high impact, but we all traded anyway because no one likes to sit still. Same people that trade FOMC. Well, I don't want to do nothing. Not for a whole day out of the year. Egads. So every morning, guys, we're checking news. We're just seeing what's going on. What are the talking heads going to talk about? When are they going to say it? How do I sidestep? How do I avoid their emotional roller coaster? Well, I went and made pancakes. It worked out perfect. I did not get stopped out of a position while eating pancakes. It was nice. The New Zealand rugby team. Guys, I'm so lost. I'm so lost. So every morning, guys, that's part of my routine. Is that the name of the team? See, I like those videos of the New Zealand rugby guys and the Maori, whatever that chant thing is that they do. Man, that's powerful stuff. I know I've seen videos of that. Rugby's not a huge thing in the States. There's a few guys with concussions running around that are rugby players, but it's not a big sport here. Everything that I'm going to talk about today is coming from the education page. Same as yesterday, same as tomorrow. Were you a rugby player, Bob? That explains a lot. Ron, you are encroaching a little bit. You're getting close. You are getting close. Just saying. We're going to lose that one. Can you guys hear me? Give me a Y if you can hear me, please. It may just be Jen. Nope. All right, man, we're struggling this morning, aren't we? Let me mute and unmute. Can you guys hear me now? Did that work? Not yet? Okay, hold on. Coming back in. Usually when I do this, you guys can still hear me as I come back from the great beyond. Hopefully it's working this time. Education room is running. And we got this. Did that help, guys? Did that work? Any sound? No sound. Andy, you can hear me? Okay. What about the rest of you guys? Nope. All right, so. All right, we're gonna full kill it. Andy, you're the only one that knows. You're the only one that knows. I'm gonna disconnect. I'm gonna kill Discord. For you YouTubers, my apologies. You guys that are watching the video, every now and then we get some technical difficulties in Discord for one reason or another. And I don't know why, but it's random. And when it happens, and we're good. But we're gonna get back to it. So I'm gonna start the stage. And share my screen. And can you guys hear me now? All good. And see, now I can't see you guys. This works just fine. I just won't do the pop out. All right, we're good. Cool. I like it. Bueller. All right, guys. So everything, each and everything that I talk about this morning, it's coming. It's coming from the education page, guys. I really don't keep any secrets. I don't want to keep secrets. I don't want anyone in this room to go, man, Nexgen won't give me what I need, because I will. I always will. And it comes right from the trading guide. And if you click on the trading guide, there's understanding indicators, trend and momentum, termination conditions, entry opportunities, understanding high probability trades. Guys, this is our focus for the entire first hour, is that high probability trade, how to understand it, what it looks like, how to study it. So if I have some newer users in here, and I hope that I do, I love it when I have newer users in here, my entire first hour is dedicated to what we call a high probability trade. And a high probability trade, it just means that each indicator on every chart agrees with the rules for the trade, guys. This is when the triggers are their strongest. This is when, whoops. This is when there's no termination conditions in the way, no areas that could stop the market, create bounces, and really there's nothing between you and your targets. I have completely lost the room on my end. There it is, I got you. And this is a trade that typically wins 70 to 80% of the time, guys. This is a trade that creates an enormous amount of confidence. This is a trade that, most importantly, it teaches you to read your indicators. I do have YouTube recording, Wayne. Absolutely. We're going to learn to read indicators. And he may have meant to put, I can't hear you, which is very possible. Guys, this high probability trend trade that I'm going to talk about today is the trade that teaches you to read your indicators. It's a trade that teaches you to understand what the software is saying to you. And then you'll be able to make good decisions about whether or not you should be entering the market. You'll be able to make your own decisions about whether or not you should enter the market. And it's going to be based off of 3 rules. And when you see the 3 rules true, you're just going to say to yourself, let's go, let's enter. This is what we do. But what you're going to find is that most days, 90% of your day is going to be doing nothing. 90% of your day is really going to be sitting on your hands and reading your indicators and waiting for advantages. 10% of your day will be actively trading. And if there's one thing that you should write down on a piece of paper in front of you with the most delicious crayon you own, it's be patient. The futures markets trade billions every day. We're just going to capture 400 to 500, call it a day, make our 6 figures. So be patient. Wait for advantages, guys, and eventually, with a little bit of study, you'll understand some really key concepts. You're fully going to understand where the market is likely to continue. That's your entry for the high probability trend trade, and for most trades that follow. You're going to understand where the market is likely to go. This is going to help you with profit targets. And then finally, you're going to understand where the market is likely to stop. And those are those termination conditions. Those are those key Fibonacci areas that could create reversals and bounces and things that mess up your good time. So we're going to focus heavily on this trade. I'm going to break it down each rule, and there's only 3 rules. And the idea, or the truth of the matter, I suppose, is that these 3 rules are like a recipe. And when the recipe is true, when you follow the recipe, you have a trade. And when these rules are true, your trade is nothing more than a flow chart. It's momentum plus a clear path and then a clearly defined entry area. And that is the highest probability trend trade, guys. It's only 3 rules. So we're going to break them down individually today. We're going to learn how to study them. We're going to look at them. We're going to say the same thing every day for the next year because it's going to stick, and that repetition makes execution and recognition much easier. These 3 rules happen on only 2 charts. There's a big chart and a little chart. How's that for technical? Large chart, guys, this is a slow moving chart. It's a very broad stroke of a brush. This large chart is really showing the overall opinion of the market. And it's really the first bar on the large chart. You could take that bar and you can define direction, you can define momentum, and you can define areas, guys. The large chart carries the brunt of the work. Rules 1 and 2, giving those first 2 advantages, happen in only 1 bar on the large chart. You'll know what you need to know. And once those rules are true, you go to a small chart. It's an entry chart. It's a refinement chart of that broad stroke of a brush. And this is where you're going to pinpoint where the market is most likely to continue. You're going to use this smaller chart initially to get in, to get the best of the best entry, to have the least amount of risk, to increase your profit potential. And your small chart will also allow you to manage once you start learning how to read your indicators. So rule number 3 is a small chart rule. And rule number 3 should only be considered when the large chart tells you to go look for that entry. We use these 2 charts because there's a big crowd and a little crowd. It's a metaphor here. The big crowd is the large chart. And the big crowd creates trends. And the big crowd creates momentum. And the big crowd reacts at key areas. And the big crowd typically wins. And your small chart is the small crowd. They hate the big crowd. A big crowd owes them money or something, I don't know. But they create fights and retracements and pushbacks. And they just go counter to the large chart. But the thing is they lose like 70 to 80% of the time. Which means that when you're using rule number 3 on a small chart, you're actually pinpointing right where the small crowd is most likely to fail, which happens to be right where the market is most likely to bounce and continue in the direction that the large crowd has created. So know who you're trading with, or know who you're fighting, and know how difficult it is to win that fight. So this has been given by Nexgen for like 10 years. No, probably 20. The step-by-step path to becoming a confident trader ASAP, guys. Post in the room, use a spreadsheet. Post in the room, track your performance. And that requires you to take pictures, guys. Pictures are really one of the fastest ways to get to where you want to be. So we're going to learn the rules. Like I said, I'm going to break them down individually. So we're not going to say this is your trade. We're going to say these are 3 advantages that we put together to create a trade. You have the ability to simulate. You can get in there. You can practice. You can work on your management. You can create a new plan. Guys, you can do whatever you want on Simulator. There should be 0 fear. And then post whatever you do, whatever you see, drop it in the room. And if you want the best feedback, and the best feedback means that I can see how you read your indicators. I can see why you did what you did, and then offer my 2 cents based on 5.5 years of reading these indicators and teaching these indicators to make sure that your read is accurate, to make sure that your entries make sense, to make sure that your exits are getting you the most out of that trade. And I'll give you things to consider. I don't give trading advice, but I will give you things to consider. So if every time you post in my room, you talk about the strength of the triggers and draw me an arrow, what we'll do is we'll make sure that you're reading that strength correctly. And if you'll talk about whether or not there was something in the way or not in the way, we'll make sure that you're reading the indicators correctly. And same thing with entries and exits and all that stuff. And when you take the time to write the whys on a chart, what you're doing is you're writing a recipe. You're saying, this is exactly what it looks like. This is the description of my pattern that's been proven to win more than it loses. And now I know what I'm doing. But it's not just trades. Sometimes you have questions. And that question might be about momentum, and it might be about termination conditions. And Lonnie dropped this one in. He goes, hey, Mark, is the mid-band a factor here? And Lonnie, the only time that a mid-band is a termination condition is if your large triggers are a full bar away. So what happens is when we talk about termination conditions, we can look at this even more in depth. But Lonnie says, hey, Mark, there's this one concept that I'm not totally clear on. And I'm going to say, oh, check it out, Lonnie. When we go back to the rules and we talk about termination conditions, you'll notice that the only time that a large sharp mid-band is a termination condition is if the triggers are a full bar away. And I won't just stop there. I'll say something clever like, and this is what it looks like. If price comes up and reaches that mid-band, you have to look at the location of your triggers. And if there's that huge gap back to them, price is more likely to close that gap. So Lonnie, what you'll notice in your picture is that those triggers were right there. This mid-band is a non-issue. And once those triggers get below the fib, it is clear path for days. Does that make sense, Lonnie? And guys, that's what posting in the room does for you. It gives you the opportunity to show me what you're looking at, to tell me what you need. Give me the opportunity to clarify and expand on any lessons that you need. So don't hold back. The people that post the most get to where they want to be the fastest. And then we will simplify today, guys. I'm going to hand you a plan. It's 2 trades deep. That's it. There's a high probability trend trade, the one that's going to teach you to read your indicators. And then there's what we call a medium probability trade. And that one is going to be dependent on what you learned in the high probability trend trade. Some people in this room love to say they didn't start to see the other trades and understand the patterns until they really focused on the high probability trend trade, and then it set them up to see the next stuff. And I think that's very true and very fair. And part of it is just learning what looks you'll commit to. All these are patterns. All these are patterns, guys. These are patterns that repeat themselves all day long. You've got to learn the looks so that they become easy. And that's where the second piece of the puzzle is. That's where using your spreadsheet. And it says track your real-time performance. I'm going to bring my spreadsheet over here and I'm going to give it to you. The tracking the real-time performance, that's the last tab on the spreadsheet. And this is where every time you take a trade, you're going to write your rules on it. You're going to talk about what you saw. You're going to talk about why you did it. You're going to drop it in this room, and I'm going to give you the best feedback that I know how to give you. And you're going to take that feedback. And tomorrow morning, you're going to wake up and you're going to say, okay, what did I do yesterday? Yesterday, I have to ask myself, what worked? Because I want to do that again today. But I also have to ask myself what didn't work. Because that's what I'm going to try to avoid. Maybe it's trading into termination conditions. Maybe it's holding a position just way longer than I needed to hold it. But I'm going to come into the day based on the conversations, based on the feedback, and it's going to set me up for the day, and it's going to give me some stuff to focus on, not only to repeat, but also to avoid. The first tab, I think this is the most important tab. I don't know, maybe the last tab's the most important tab. I guess it depends on you. This is where you learn what it looks like to have your rules met. This is called the basic rules section. I'm going to give you a sheet that's going to help you fill this out, a little study tool. But it's basically, in the green section, what it looks like to have your rules met so that you can commit that pattern, that look to memory. But it also shows you what it looks like when your rules aren't met. Because the goal should be that you're trading with advantages. And if the advantages are present, you've got to get in that market. And if the advantages are not present, you've got to convince yourself that it's okay to not be a part of that move. The second tab is the client trade section. And this is me stealing pictures from you guys. This is me saying, wow, what a great trend trade. Let me put it in here. What a great medium probability trend trade. Let me put it in here. Let me set this up over 400 pictures and let the new people come in and start clicking on these and looking at them and recognizing these patterns. It breaks down the entry sequence for the highest probability trend trade, how to define precisely where the market is most likely to continue. There's a management section. This is in the lighter orange, the management that you're going to get on the KISS plan that I give you, the very simple plan that I give you. And it's broken down into pictures, and it shows you exactly where stops go and how to put targets in there, and just really keeps you focused on learning how to adjust stops and get paid. And then there's patterns that repeat themselves. The more time you spend in the market, the more time you spend reading indicators, the more patterns are going to jump off the page at you. And you're going to start to build your plan based on those patterns. You're going to take that very simple, remedial, highest chance of success plan that I give you, and you're going to make it work for you. And that's where your pictures are going to pay dividends, guys. The more you see, the more opportunity you find. So take a lot of pictures. Fill up this section. Make it look like the one that I put together for you. And what you'll find is that if you commit to 15 annotated pictures a day, that's it, just 15. I've already done that twice over this morning. That's 300 pictures a month. And if you honestly go back and take the time to study those, it's that repetition that creates the recognition you need to read your indicators quickly, to not miss these trades, to find these opportunities. So as we move through the day, I want you to ask a million questions. I want you to post a million pictures. I want you to make me say at 11 a.m., oh my gosh, this one's going to run over because this classroom's given me everything they got. That's what makes a great class. And we're going to get going, and we're going to start with indicators. Understanding what you're looking at, because you've got a big chart and a little chart, and both charts are going to have triggers, and we're going to use them on both charts. So know the difference between a small trigger, which is a solid 2 lines, it's a fast moving average, and a large trigger. It's a slow moving average. Dashed lines. When they're going up, they're going to be green, and when they're going down, they're going to be red. We're going to use these for momentum. We're going to use these to identify termination conditions. We're going to use these to define entries. So just know the difference, small and large. And that way, when the rules say you must have strong triggers, you know what we're talking about. Both charts will have areas. They have a different role depending on the chart, but the names are all the same. Just learn the names. A divergence high, it just means there was a loss of momentum from a high pivot. A divergence low, the cyan line, just means there was a loss of momentum at a low pivot. You're going to see Fibonacci resistance, yellow 1-to-1s, mid bands, Fibonacci support, guys. Know how to identify them, because on a large chart, they could stop forward progress, kill a trend. On a small chart, we're going to use some of these for entries. They're going to give us the same bounce, but in the direction of the trend. And we're just going to take those indicators and piece them together to describe a pattern that has been proven to win more than it loses. I love that phrase. I'm not looking for a trade, I'm looking for a pattern. And I will trade that pattern, guys. And the pattern begins with strong trigger lines on the large chart. Large chart leads the way, because strong trigger lines give us the advantage of momentum, and that's the first advantage we're looking for. This is just a flow chart. And the only way that you can have strong triggers is to be trading with the trend. Background's green, it's going up. Background's red, it's going down. How easy is that? Unless you're colorblind, in which case I'll teach you a trick. Let me know. But the trend lets you know which direction to be looking for rules to be met. As a brand new user, your highest chance of success comes from not fighting the trend. When you have experience, Ron posted one in there, you might find a way to go counter trend based on your ability to read the indicators, based on the patterns that you recognize. But until you can do that, your safest bet, the trend is your friend. Guys, they've been saying that forever. And the only way to have strong triggers in an uptrend is if your triggers are green. And the only way to have strong triggers in a downtrend is if your triggers are red. And the look is the same, either direction, it's just inverted. In an uptrend, your small triggers break above and away from the large triggers. The large triggers are widening. There's space between the two. I want you to picture, you know what, I haven't drawn the picture all week. We'll do it. I want you to picture, in order to have strong triggers, you have scissors. And those scissors are open and they're able to cut. And in a downtrend, smaller below the large, larger wide. And once again, I want you to think scissors. Those are wonky scissors. But when scissors are open, when there's space between the two triggers, guys, you have strong trigger lines. That's your look. And when you have strong trigger lines, the odds are favorable for the market to continue in the direction of the trend. And odds favorable momentum, guys, that's our battle cry. You're going to see it annotated on charts, OFM, all day long. Odds favorable momentum pushes the market in the direction of the trend typically. Odds favorable momentum is what we're looking for to break key Fibonacci areas. Odds favorable momentum, that's when we're using a refinement chart to buy Fibonacci support or sell Fibonacci resistance. And odds favorable momentum, God bless it, it'll even cover some of the mistakes that new users tend to make because it's hard to stop a market that is railing in the direction of the trend. But momentum goes away if your scissors close. If your small triggers work their way back inside of the large triggers. Guys, this is a weakening of the large triggers. When you have weak large triggers, anything can happen up or down. Your advantage is gone. Know the difference between strength and weakness. And brand new users, your highest chance of success comes from committing to the strength. So this is the S&P today. Let me get to where we're at. I want you to see. Strength pushes up, strength pushes down, strength pushes up, strength pushes down, strength pushes up, and now we're into weakness. And guys, it flows all day long. But with that strength, each of these tails is a potential entry. Each of these tails might create opportunity. So we're going to learn how to do that. But is everybody cool? Seems like a pretty easy lesson, right? If the triggers are separated, you have strong triggers. If they're not separated, you have weak triggers. Your rule isn't met. Odds favorable momentum, guys. Strong triggers has nothing to do with the price bars. Odds favorable momentum has nothing to do with the key Fibonacci areas on your chart. Odds favorable momentum is simply a description of the trigger lines being separated from one another. And once you have it, that market's going to be hard to stop. But you're going to be able to identify the areas on a large chart that have the ability to do just that. And those are called termination conditions. And a termination condition is, it's a horizontal line on your large chart that has the potential to stop the market. And if there's none present, you're going to have room to your profit targets. You're going to have a clear path. That's the second advantage. So we're going to be looking at Fibonacci support and Fibonacci resistance. We're going to be looking for yellow 1-to-1, cyan divergence lows, and magenta divergence highs. And again, guys, it's just horizontal lines on a large chart. These are the areas where the large crowd are most likely to make decisions. These are the areas where buyers buy and sellers sell. And look, these are the areas where fights happen between the two forces that move the market. And there's no reason for you to ever be caught in their fight because you know where they are, and you're going to know where they are long before you get there. So to identify a termination condition, we're going to let the big crowd get to the line is the easiest way to say it. We're going to let price reach an area. And if price reaches resistance, resistance could be a divergence high, a yellow 1-to-1, or that red fib. All you have to do is say, where are my triggers? Once price reaches the area, sets off the decision-making process. And then we're done with price. Price is no longer a factor in anything with the area. The trigger lines will tell you exactly what you need to know. Every time price reaches an area and the triggers remain below, it's a termination condition. And there's 4 things that could happen. This area could break and the market could actually just continue up. This area could create one of those big ugly fights between the buyers and sellers that you don't want to be a part of. This area could create just an untradeable bounce, just a big enough push to take you out of a long position if you chose to trade into the area. Or this area could reverse the market completely, turning those large triggers from green to red. These 4 things that could happen aren't really predictable. You'll never know what it's going to be. Avoid the temptation of using words like it should, it has to, it will. You don't know. The potential is there. You'll never know what the reaction is going to be. So if price reaches resistance and you ask yourself, where are my triggers? If they remain below, it's a termination condition. And that termination condition means that rule number 2 isn't met. And it means absolutely no trades into the area. And guys, this is such a safeguard for new users. Price comes down, reaches Fibonacci support. Once again, all you're doing is you're asking yourself, where are my triggers? If the triggers remain above Fibonacci support, above that divergence low, above those 1-to-1s, guys, it's a termination condition. It could break, it could bounce, there could be a fight, it could reverse completely. You'll never know. But rule number 2 says, no trades into the area. Is everybody good with that? If you do just a little bit of study, you'll notice that even with odds favorable momentum, these fibs can stop a market. Even after a giant down move, where did that giant down move stop? Right at Fibonacci support. From resistance to support. And guys, look at the big untradeable bounce. And then they headed off to the next area. The people in charge know exactly where these areas are. You know exactly where these areas are. You can choose to not trade into them, to avoid their decision-making process. 2 options I want to talk about. If the market reverses off of a termination condition, if none of the triggers get through and that resistance creates a downtrend, large triggers roll, or that support creates an uptrend, large triggers roll. Guys, that termination that reverses the market is what we call a strong top or a strong bottom. And you're going to need to know that, not for the high probability trend trade. Good morning, Cav. It's not a rule. But for the second trade on the plan that I give you, you'll need to be able to identify a strong top or bottom. It's the precursor to the highest probability trend trade you could ever take, and it's rule 1 for an awful lot of trades that Nexgen teaches. So it's either going to break or roll. This is what it looks like when it breaks. The black and white, brand new user, give it a week or 2 to learn this, is it's either price reached resistance, number 1 here, big stop sign, triggers remain below, just wait for the reaction. Remember that your patience is a virtue. But if both the small triggers and the large triggers, both lines of each, get above resistance, resistance is considered broken. And your path is clear as long as you haven't reached another area, and your path remains clear until you reach another area, which means with this momentum and that clear path, I'm going to look for an entry for the high probability trend trade. So let it either be a termination or a clear path. And it sets you up for number 2. And number 2 is going to be the medium probability trade that you're going to see on the plan that I give you. And a medium probability trade means that most of your indicators line up. However, small issue exists. Your issue in this case is going to be that that area is not broken yet. But because of the trigger line location, because of the momentum present, you're going to say to yourself, this has the potential to break. And guys, when your small triggers absolutely smash through a fib, but your large triggers lag behind, 50% of your triggers are through, 50% are not. We very cleverly call this the 50-50 look. And as long as you have momentum, and only if you have momentum, this area has the potential to break. And guys, you can take advantage of this look, but it's not a clear path yet, which means that you're going to have to manage a little more assertively. You're going to have to look for change on that smaller chart to make sure that that potential doesn't go away. And that's your second look. And I want you to see how often that happens. Potential to break, but did not. Potential to break, but did not. Potential to break, but did not. And guys, you see this over and over. That potential shows up. Look how termination conditions define the fight between the buyers and sellers. So I'm going to give you a set of rules and a plan, but it's going to be pretty important that you understand that that is only potential. And again, black and white, let it be a termination, price reaches, no triggers, no trade, wait for the reaction. Or let it be a clear path, couple it with momentum, look for entries, guys. And that path remains clear until you reach the next area. Understand that this is only potential. Is everybody good with that? And let's see if we can find it. That's the S&P, and man, they're cranking. Look at the distance in that move. Big untradeable bounce off of resistance, right to support. Finishes it at resistance. And is it just me, or is that damn near to the tick? And that's where the market started heading down. And some of you probably found opportunities in that range. Whoops. Let's look at crude oil. What's crude oil doing today? Strong triggers seems to hold true. Weak triggers seem to give reversals. Divergence low with weak triggers created a reversal. Broke support, pulled back, it became resistance, finished the move down. And all of that nonsense on the way down, guys, started from Fibonacci resistance high. Guys, I'm telling you, a little bit of study on termination conditions is going to keep you out of a lot of avoidable losers. Learn the recipe. Price reaches area, we're done with price, where are my triggers? Triggers tell the story. And here's the sad news for you adrenaline junkies. There's going to be times when your path isn't clear because the areas are stacked. Meaning maybe fib after fib after fib, or fib, divergence, fib, one-to-ones, whatever. Guys, this is 90% of your day. 90% of your day is sitting on your hands doing nothing, knowing that your trade is coming. It's just not there yet. And it's okay to do nothing. It's actually important to learn how to do nothing. Because the futures markets, I said it earlier, I'll say it again. So Better Dad, give me 1 second and we'll do a little tech stuff for you. Guys, this happens quite often. Futures markets trade billions every day. Find a way to capture 400 or 500. You're in a six-figure income, guys. You don't have to be in every move. You don't have to be the last one out or the first one in. Use that momentum, use that path, and find a way to capture just a little bit, couple times a day. Hit your goals consistently, taking the best trades, not all the trades. So Better Dad, when you're crashing, is it the same workspace like your ES workspace? You bring it up, boom, it goes down. That's typically when you start getting multiple crashes, that's what's doing it. There's something corrupt within a workspace. Depending on how technically savvy. When you say you've rebuilt it, you've gone through, you've deleted all the workspaces, all the templates, you've gotten rid of all the crud and started 100% fresh by going to the resource page and overriding the indicators. Right on. So what you're doing, Better Dad, is you're reopening the same corrupted workspace. I know this because I've done this a lot. So the link that I just put in there for you, this is going to have you delete your old charts and templates. And then once you do that, you're going to go to the resource page and run these indicators again. And it's going to ask you if you want to repair NinjaTrader 8, do it. Knock it out. This whole process might take you 10 minutes. if you've never done it, once you've done it a couple times, it takes maybe 7 to 8 minutes to do a complete rebuild on NinjaTrader. But here's the wonderful thing. If you're not comfortable with it, just go to tech. Let Jason do it for you. And he will. He'll knock it out for you in a couple minutes. He'll go through, get you all squared away. But if you want to try it on your own, knock it out. If not, let Jason step in and help out. But usually when I crash more than twice, I go through that process. I delete all my old charts, I rerun, and then I'm good to go for a long time. Yeah, it takes him. He's quick. He is quick. All right, guys. So that's large chart terminations. That's rule number 2. That's the most broken rule out there. Learn the recipe. And then there's one small chart termination. And this happens on every chart. This small chart termination is called 3 divergences in the same price range. Oh man, I lost you guys again. Son of a gun. There you are. 3 divergences in the same price range, guys. That could terminate a trend. Divergence is just a loss of momentum. You'll see this on a big chart. You'll see it on a small chart. On a big chart, if you see 3 divergences, very often you get much bigger moves. And if I'm not mistaken, crude oil had 3 divergences right at a low before that market rocketed up into the 70s, or the higher 70s. But on a small chart, these 3 divergences kind of give you a little heads up. You can't see that change coming on a large chart. Large chart still has odds favorable momentum. And inside of that one bar, you're seeing all of this fight from the small crowd. So if you ever see 3 divergences in the same price range, guys, your advantage is gone. It's a termination condition. And that's the only thing that'll keep me out of a high probability trend trade if I have that large chart momentum, if I have that large chart clear path. So guys, I'm going to ask for a why. Let me know. Is everybody good? Strong triggers. It's just a separation. Termination conditions. Go through the recipe. Price reached the area. Where are my triggers? Once you have these 2, once this core is built, once this foundation is established, guys, you really do have everything that you need to create your own very consistent, very profitable plan. And you're going to see a lot of trades in this room that just revolve around these 2 ideas of momentum and path. But initially, we're going to define an entry area for the highest probability trend trade. That's where rule number 3 comes in. And that is exactly, I forgot what I was going to say. It's precise. Small chart, when the large chart rules are met, guys. And your entry is so precise that you're going to use a limit order. You're going to be able to wait for the market to come to you rather than chasing the market. And you're going to use a limit order to buy or sell a pullback. And just a reminder, a pullback is that little fight from the small crowd. The large chart doesn't blink. Momentum and path it stays consistent. And that little pullback within, guys, that's how we're going to capitalize. So we're going to use a limit order to buy or sell a pullback at an area, at a fib, at a mid band, at a yellow 1-to-1, because the same way areas on the large chart can stop trends, can create big untradeable bounces, areas on the small chart can create those same bounces. But since it's a tiny little refinement chart, the bounce is going in the direction of the trend. But you want those areas to be inside of triggers. And this is such an important part of the equation, guys, because triggers, large triggers specifically, this is where price returns. I don't care what chart you're looking at. If it's a tick chart, if it's a Renko chart, if it's a range chart, price comes back to the large triggers. And this is pretty much a gospel truth. Price accelerates away from the triggers and pulls back, and accelerates away and pulls back. Over and over, it accelerates away and pulls back. So we're going to use that we're going to use that pattern to our advantage. We're going to define. Better dad, if you're walking off angry, why? You know what? Okay, good idea. Go cool off. Guys, price returns to the large triggers. Right on. And on a small chart, it returns to the large triggers. Those are your 5-1 large triggers. They're smooth. And you'll use those versus the small triggers to define momentum on a small chart. But your small chart also has the 13-2, the large chart, large triggers. So these triggers work together, large and synthetic, and they define the most likely range for the retracement. So once the small crowd starts fighting, you can define where the retracement is most likely to go using the large and synthetic triggers. 13-2 are synthetic because they're from a different time frame. So this big box shows exactly where the retracement is most likely to occur, where the push down is most likely to go. And better dad, get with tech. If you can hear me, get with tech. Guys, there's no reason to frustrate the hell out of yourself. Jason is brilliant. And the only things that Jason can't fix are the things that aren't broken. If when looking for entries, especially as a brand new user, you insist on what we call favorable large triggers, guys, this is where your highest advantage comes in. Favorable large triggers, it just means that those large and synthetic triggers, they're both wide. They're angled in the direction of the trend, but most importantly, they're overlapping. They are one on top of the other, two snakes riding piggyback. And it gives you the smallest little zone where the retracement's most likely to occur. This increases accuracy. And then when you put a fib or a mid-band or a yellow 1-to-1 inside of those triggers, it gives the market something to bounce off of. The areas inside of triggers are bouncy, not so much the triggers themselves. And guys, favorable large triggers provides the smallest little window where the small crowd is most likely to fail. And favorable large triggers creates the most accuracy and typically the least amount of risk. So we're going to use a limit order to buy or sell a pullback to an area inside of triggers. Understand, this is where the accuracy is its highest, but let's go through it. Long trade. Large chart says up. Large chart has momentum. Large chart has a clear path, guys. Your large chart, in this instance, looks like this. It is screaming north. And your small chart is screaming north with it. And your fear of missing out begins to kick in. How am I ever going to make money if this thing's running without me? Well, the pattern repeats itself, guys, and you're going to wait for a reversal bar. And this reversal bar, this one down bar on a tiny little insignificant chart, little entry chart, this signals the beginning of the fight from the small crowd. This signals the beginning of the retracement. And price tends to return to large triggers. And you have large triggers and synthetic triggers, so draw a box from the highest line to the lowest line, and this is where the market is most likely to retrace. Somewhere within this range is where those down bars are most likely to go. But trigger lines are not your entry. Oh, for sure. No, I think he's got an easy trading computer. Appreciate that. I think he's solid on the computer. I think that sometimes, guys, workspaces get corrupt. Something goes corrupt inside of them. It's just a byproduct of a digital age. And sometimes you just got to give that workspace an enema and come back clean. So triggers define the retracement. Areas inside of triggers will define where the market is most likely to bounce. So once you identify the triggers, you know where the market may return. And then you need an area. Fibs, mid-bands, yellow 1-to-1s, not divergence lows, not pink 1-to-1s. Learn the list. Fibs, mid-bands, yellow 1-to-1s. And guys, I will almost always, when I write rules on a chart, capitalize inside. I want my areas inside of the retracement zone. In this box, from the highest area inside of triggers to the lowest area inside of triggers, this shows me where the market is most likely to bounce in the direction of the trend, where the small crowd is most likely to fail. And guys, this is such a tiny little area. You're going to activate a limit order a tick or two above it. And you're going to say to yourself, I've done all I can do. I have insisted on momentum on the large chart. I've demanded that there's a clear path. I've pinpointed where the market is most likely to continue, and I'm going to wait for them to come get me there. I'm not going to chase this trade. And if they do, you're in a long position with all those advantages. You're in a long position trading a pattern that has been proven to win more than it loses. That's your high probability trend trade entry, guys. And you just have to learn the little recipe to pinpoint. Reversal bar begins the pullback is not your entry. Trigger lines define the retracement zone, not your entry. Areas inside of triggers are where the market is most likely to bounce, but I'm not going to trip over a couple pennies to save a few dollars. My limit order goes 2 ticks above. And here's the cool thing, and I think that I'm going to draw on a chart here, guys. Trigger lines define where the retracement is most likely to occur, from the top of the triggers to the bottom of the triggers. Is everybody good with that? Areas inside of triggers define where the market is most likely to bounce. And there's a window there. It's a little bit of a range. Guys, because you know where the market is likely to retrace, because you understand where the market is most likely to bounce, you can start to say to yourself, anything on the wrong side of those triggers, anything below the retracement zone, beyond those bouncy points, guys, this is not a part of the equation. This is where my advantage is gone. This is where rule number 3 is no longer met. So you're going to learn to ignore the fibs beyond the area in a short trade. Reversal bar, not the entry. Triggers define the retracement, not the entry. Area inside of triggers, there's your bouncy stuff, guys. And anything beyond the retracement zone, anything beyond the bouncy stuff, this is not a part of the equation. Once you get to the wrong side of the triggers, once you get beyond those triggers, you don't know if, when, or where that market may continue down. You don't know if, when, or where that market may continue up. So for the brand new user, anything beyond those triggers is horrible. So much so that this is where management kicks in, guys. Because you can define where the market is most likely to continue, you have defined where the market should not go. And where the market should not go is where your initial stop is going to be placed. Typically 4 or 5 ticks above all the trigger lines. And if the market, if the small crowd has it in them to push through the retracement zone, if they have the power and the support behind them to get beyond the areas inside of triggers, guys, they're going to run into your stop. You're going to take a loser. And anything that wins 70 to 80% of the time has to lose 20 to 30% of the time. You will take a loser. Guys, this is acceptable losses. This is a normal part of a positive equity curve. If you go through and you have all of these advantages, you have a trade that's been proven to win more than it loses. Guys, be willing to take that trade, but force them to come get you where the market shouldn't go. Don't give it up in a retracement zone. Don't give it up in an area that's most likely to bounce. And this is the pattern altogether. This is what it looks like when the 3 advantages come together. It starts with strong triggers. Once I have strong triggers, if I have strong triggers, then I will see if price reached an area. It did not. But I'll make sure that price cleared the previous. And if my large chart says, hey, go look for an entry, it's trading all the way up here, guys. It's like 8 ticks off of trouble. And that's a little nerve-wracking for some people. But the top of this bar is where the retracement starts. And once that reversal bar prints, I'm identifying areas inside of triggers, and this is giving me, instead of $80 worth of profit potential, it's giving me about $300 worth of profit potential. And I'm not worried about these one-to-ones because termination conditions are defined on a large chart. And I'm not worried about these small triggers turning against me because momentum is defined on a large chart. The only thing I'm doing is pinpointing where the market is most likely to continue. And I know where the market shouldn't go. And guys, this is your pattern, and you can go back and study this historically by circling that tail. You can go back and circle a tail on a large chart when the rules are met, or at least when there's the potential to break. We'll do it right here on crude oil. And with that circled area, I can go to a small chart. And I can find my circle. This is your study, guys. This is how you're going to get to where you want to be. Does everybody see how price pulled right back to resistance, right inside of the retracement zone? And with all of that momentum, continued all the way down to trouble and weak triggers? This is the pattern that you're learning. 2 ticks below resistance in the retracement zone. Hold on. Is it possible that crude oil is giving it up today? A lot of pictures, so I think so. Lonnie, were you not in here for the clarity on this one? And guys, if you ever have to go to work, let me know. We'll look at your pictures. Lonnie, the midband is a termination condition if the large triggers are a full bar away. If you go to the basic rules and you look in the termination condition section, midband is a term. So this is the only time the midband is a termination condition. If price reaches the midband and the large triggers are below the reversal bar marker, or the other direction, above. See how price comes back and closes the gap to triggers, Lonnie? This is the only time your midband qualifies as a termination condition. And it takes a little bit of study to learn this pattern. But in the picture you posted, that midband is a non-issue because those trigger lines are so close. And it is not at all a 50-50. You have a clear path because all the triggers are below, and you have odds favorable momentum, and I hope you are excited to take that short trade. Not a strong top. So Lonnie, the recipe for a strong top. First, it has to be a termination condition. Price didn't reach an area. It created a divergence low, but it didn't reach, or a divergence high, but it didn't reach a divergence high. So what you have here is a weak top because it didn't come from a key Fibonacci area. You do have odds favorable momentum, and it does have the potential to break. 1 divergence typically kills it. 2 divergences makes it even worse. 3 divergences, well, that one's already broken. So you got in on the second entry. Looks good. And you got out of trouble. Looks good. And I love this. Divergence but. Divergence but. Guys, when you show me your but as a brand new user, you're setting yourself up for some troubles. Learn how to follow the plan. What do you think the odds are of a 50-50 from a weak top winning with 2 divergences? I would say, Lonnie, you've probably got about a 20 to 30% chance of victory here. This is one of the ones where you got lucky. So even though you won, even though you made money, I'm obligated to tell you, Lonnie, you're setting yourself up for long-term failure based on a short-term victory. Because more often than not, especially from a weak top, 2 divergences is going to kill this trade. It just happened to not this time. But if you sat everybody in this room and asked them, they would tell you, oh, this is what we do every day. And you showed me everything. I love it. And what you did is you managed this very aggressively. Very aggressively, which is exactly what you have to do when your advantages start sailing out the window, guys. Lonnie, great job on this one. And then Cab, I knew somebody would chime in. And there's a lot more of you that are thinking it. Cab typed it out. 2 divergences on a 50-50 is damn near the kiss of death. But one of the things that happens is people get lucky. And we say that when you get lucky, it's a short-term victory, but it's typically long-term failure. Check it out, guys. Odds favorable momentum, clear path, area of resistance inside of triggers. Does everybody see it? This is a setup. First, it's strong triggers. haven't reached divergence low, triggers have cleared the previous. My rules say that if the market pulls back to a mid-band inside of triggers, I'm obligated to take this trade because this is a pattern that typically wins more than it loses. Does everybody see it? This is a live version of what we just talked about. Am I guaranteed a winner? No. But I know exactly where the market shouldn't go if I enter it. Are they going to get me? There I am. And my stop's where the market shouldn't go. And guys, this is all you can do, is you can recognize advantages. You can identify where the market is most likely to continue. You can enter the trade. And that's it. That's all you'll ever be in control of. Absolutely, Lonnie. Post everything. Win, lose, or draw. Always. So guys, the goal is that you always look at your large chart first. That you identify strong triggers. That you determine your path. And this is your core. And the easiest way to do that is to take 25 pictures, guys, of strong triggers and annotate it. This is why it's strong. This is what it means to me. Take 25 pictures of weak and annotate it. This is why they're weak. This is the advantage that I'm forfeiting. Same thing with path and terminations, guys. And if you put these in the spreadsheet, if you come back and study these a little bit every day, it'll take you 5 days max to know exactly what it looks like to have your rules met. And you'll start doing things on autopilot. As you learn these lessons, I'm going to give you the high probability trend trade checklist. And this is the best of the best, guys. Is the market coming from a strong top or bottom? There's your definition. So Lonnie, as you work through strong tops or bottoms, bring this picture up. Make sure it's a no triggers through termination that reverses the market, and you'll be consistent. Make sure that you actually had momentum, not weak triggers, and you'll be consistent. Make sure that you know whether it's a termination, the potential, or a clear path, so you know how to manage. Define your entries. Know where the market shouldn't go. And then print this bad boy out. Because, guys, this is the high probability trend trade checklist. And this checklist has never been followed truthfully and had the results less than 70%. But as you're learning to read your indicators, as you're learning to get good at things, guys, consistency is important. The consistency to take the same trade over and over. The consistency of taking the same entry over and over, of understanding the advantages. No, so because what happens, Lonnie, is price doesn't reach a single divergence. Price creates this. So when the market goes down and goes up 2.5 bars, your software says, oh man, there was a loss of momentum, let's create a line. And then when price comes back and hits that line, this is when divergences can become termination conditions. Price reaches the area, the first part of the equation. Does that make sense? And you'll notice that here, it didn't break. So strongs can come from a divergence, but on the retest, not the creation. Does that make sense? Awesome. That's a good lesson. We're still in the trade. Pretty cool, right? Guys, print out that high probability trend trade checklist. Hold yourself accountable. Write these rules on the chart. And these are the rules you're going to use for the KISS plan. I'll show you exactly. You want to know how you can tell the creation? Is you'll see the line. And that's it. You'll see the line. See that negative number flashing? Let me see if I can push this up. So that negative number flashing right there lets me know that the potential for divergence is present. But until the market goes up and then up 2 more bars, it's just potential. It'll take a full reversal bar and 2 bars following it. And then if divergence is true, that cyan line will print. So that's how you know. It literally happens. But if this market continues down, Let's get some entries and exits on there. If this market continues down, that divergence will never be true. Boy, they're trying to hit that first target, aren't they? So guys, the KISS plan.
Target filled.
Target filled. Happiest sound in the world. And the KISS plan tells me that once my target is filled, I have to go break even. And that's what this does for you right here, guys. So the KISS plan, this is your stepping stone. If you're a brand new user, this is the one that optimizes your chances of success. This is not your only trade. This is your first trade. This is your foundation, guys. And this one is designed to get you into the market with the highest chance of success, because that's where confidence comes from. And you, through simulation, study, class feedback, and continuous practice, you'll create your own plan if you feel like you need to. You'll see more, you'll do more, you'll manage differently. But until you can really read those indicators, until that read becomes second nature, until your management becomes automated, guys, this puts you in the highest chance of success. And I'm telling you, this is a plan that's been proven by brand new users to be able to win more than it loses. I've had people get funded in prop firms in their first 30 days with Nexgen, learning and following this plan. And what happens, and Lonnie, you saw it, is you start getting impatient. You start using words that pull you outside of the plan, but, right? And that's where, yep, mine too, Pete, I heard it. That's where people tend to go sideways. So until you're consistent, guys, keep it mechanical. And there's two things you have to know before you're trading and you're not on simulator. Very important phrase, because if you're on simulator, kill that thing. Take them all. Annotate charts. Drop them in the room. Let's identify challenges and learn how to work around them. But why will I enter a trade? Because my rules are met. That's the only reason. It's the only reason to enter a trade. Because my rules are met. Because rules describe a pattern, and that pattern has been proven by you to win more than it loses. Don't trust me on this one, guys. Don't you dare say, Mark seems like an upstanding young man. He says it's true, therefore it's true. Guys, you can go back and circle those tails and prove these patterns work, and you'll verify and validate, and you'll realize that you won't be able to talk yourself out of taking a high probability trend trade because you know that it wins more than it loses. That's going to help remove a lot of the emotions. But you also have to know why to exit. Exits come when advantages leave. That's it. Either you hit a target or your advantages go away. Or you're following the KISS plan in the beginning. And that's what we did in the crude trade. But if I enter a trade and the market goes beyond those trigger lines 4 to 5 ticks, my advantage is gone. I'm going to exit. If I enter a high probability trend trade and 3 divergences print, my advantage is gone. I'm going to exit. And I'm going to exit confidently and happily because I know the next trade is coming. So define your entry. Great entries create manageable trades and learn how to manage it. And guys, management is where you guys get scared. Management's where I got scared. Oh my gosh, I would take the highest probability trend trade. And after a couple losers, I would take 20 trades in a day and I would be up 15 ticks and down money because of commissions, because I didn't know how to manage. My management was based in fear. So this management plan and the KISS plan, guys, it's designed to help you overcome fear a little bit. It's very if-then, it's very mechanical. It's designed to help you with stop placement. It's designed to get you focused on getting paid because so many of us hate the idea of not getting paid. Guys, that crude trade was $100 in the bank before it popped back up. You got paid, even on a trade that didn't do exactly what the pattern suggests that it usually does. So let your management be very mechanical, and that's what the KISS plan does for you here, guys. And it is dependent 100% on your ability to enter the market where the market is most likely to continue. So if then, and I'm going to encourage you, not going to force you, not going to even give you advice because I don't do that. What I'm going to do is I'm going to say until you are comfortable with your management plan, let this one play out on simulator. Avoid the temptation of arbitrary stop placement. Avoid the temptation of moving your targets. Just let it happen and see what happens. And you'll be amazed at how that repetition helps. So if my entry is 2 ticks below resistance inside of triggers, then my initial stop is 4 to 5 ticks beyond the triggers. And that's it. That's where the market shouldn't go. And you will know where your risk is, what your risk is, before you ever enter the trade. You'll know that you have $150 per contract in order to have your stop in the correct spot. And if you're not okay with that amount, then don't take the trade. Because if you change your plan and put your stop where the market's most likely to bounce, where it's most likely to retrace, guys, you run the risk of the market hitting you and just dropping like a ton of bricks, and it goes without you. And then that anger spurns bad decisions. Targets are predefined, $100 and $200, guys. And this is for the S&P. This is for crude oil. If you're trading like the RTY or the Dow, the tick value is half. You're predefined at 50 and 100. So if they don't hit your stop, there's that if again. If they don't hit my stop, then I get a reversal bar in the direction of the trend. And if I get a reversal bar in the direction of the trend, I'm going to redefine where the market should not go. I'm going to put my new stop 2 ticks above that reversal bar. And I went from 150 per contract to 30 per contract in the risk. And there's nothing to do. It's either going to hit my first target or I'm going to take a little loser. And I'm cool with little losers because I have all the advantages. But if it doesn't stop me out, it means it went to my first target, guys. And that's $100 in the bank. That first contract is removed. It's there. It's your money. They can't take that from you. And now with one contract remaining, you're going to go break even. And break even may not be the best stop ever, but as you're learning to trust the large chart, as you're learning to trust momentum and path, as you're learning to trust the high probability trend trade, guys, having no risk on the trade makes it easier to hold for the second contract. And if it hits the second contract, guess what? That's a $300 trade. That's $300 from 4 minutes of your life, guys. $300 in the account. And if that's the best you did every day for an entire trading year, it's a $75,000 year. One trade, 4 minutes. Doing nothing until there's something to do. And guys, at $400 a day, you're in 6 figures. Use a trade copier. Do it in 2 accounts. You're at $250,000. And that's the goal, guys. The goal is to get to a point where you can get paid consistently every day. Consistently. Best of the best. And that's what puts you where you want to be long term. Not the $1,000 day once a month, but the $300 to $400 day every day for the rest of your life, guys. You never work again. And that's it. That's the high probability trend trade. So everything that we've just talked about, and look at that. With momentum and path, it didn't go where the market shouldn't go. And guys, that's why I say break even may not be your best. But as a brand new user, you still got paid. And dollars to donuts, they go test that lower resistance. So everything you need is in this zip file that I just dropped in the chat box, guys. Everything that we've talked about, every document that I've shown you, the PowerPoint that I used to teach, the KISS plan, everything is in that zip file. Here's another spreadsheet in case you didn't download it the first time because you weren't a believer. Grab that spreadsheet. Track your trades. Ask for feedback, guys. You've gotten the rules. You know how to study them, where to find them. You've got a spreadsheet to study them with. You can simulate 15 hours every week, guys. Tons of feedback in this room. You have a plan that's been proven to win more than it loses. Learn the looks of the plan. You have everything that you need to be successful with the software except the experience for it to seem easy. The experience for recognition to come at a moment's notice. If you're brand new, you're feeling like this right now. I know it. Keep it simple. Learn the individual concepts and learn how to piece them together to create a trade. Guys, focus on the process rather than the results for 30 days. You'll be amazed at what works out. And then before I take my break, the key to everything, guys, the key to all of it, build a foundation, have a foundation, understand the core, and then get a little bit better every day. The Japanese philosophy of Kaizen, 1% better every day, guys. So for new users, I know that I do this on purpose. There's blanket rules, very conservative rules. Recognition of advantages, a solid plan that optimizes the chances of success as you learn to read your indicators, guys. So for brand new users, it feels like all terminations are bad. No momentum is bad. Wrong side of the triggers is bad. And these blanket rules increase the likelihood of success, which increases the confidence that you feel in your patterns in the software. But they're not always bad. But until you have the experience to know when to use exceptions, it's just safer that way. And then just like anything, the more you spend with it, the more you see, this opens doors. But learn the process that yields the results. Focus on the process. Momentum, path, and entry. And the results seem to follow. And if you're okay keeping it that simple, if you're okay looking for the best trades, not all of the trades, success tends to follow, guys. And I've watched it repeatedly for like 5 years. The people with the smallest plans, the people with the fewest rules, these are the people that tend to get to where they want to be the fastest. The people that keep it simple tend to get to where they want to be the fastest. The people that post in the room tend to get to where they want to be the fastest. The people that use a spreadsheet tend to get to where they want to be the fastest. Guys, it's a proven recipe from almost 30 years of teaching people to day trade. And because you're all human, you're going to fight it tooth and nail until you get so tired of losing that you simplify and you begin to find that success, guys. So question everything. Give yourself a little grace. You are brand new. Don't be in a hurry. This is a marathon, not a sprint. KISS plan provided a $100 winner for you guys. And they're still in the range. They're still in the retracement range. It doesn't mean that it won't go down, but you're watching that fight between the buyers and sellers. I'll be back in 5 minutes. When I come back, we're going to start looking at pictures and answering questions. I'll see you guys in a few. All right, guys, here we go. Second hour. I'm going to scroll up to the top. I'm going to start clicking on pictures. And guys, this is a great example of why having a management plan, having a willingness to exit the market when conditions change. It's okay to make $100 a pop. Just do it 5 or 6 times a day. And how great, how easy does life get? All right, Pete got us going today, and we're going to look at his 3. And he starts off with the idea that when you're in a strong trending market, everything says down, you get below the trouble areas. Pete says, I could just kind of hop in and find some money. And I like that. It's just great, guys. It's momentum and path. It's just a market that's screaming down with nothing in the way. And he says, I'm going to get in and I'm going to get out. And I'm going to make this money. And then, Pete, the only thing I can say about this, and guys, I know that you have your plan, right? But if you're not in a plan, any trade that is based solely in momentum, this reversal bar on the wrong side of the triggers, that's your loss. That's your loss of momentum. And that's a 6-tick difference between that loss of momentum and the actual exit. And I know that seems, oh, Mark, it's only 6 ticks, right? It was worth it. It was only 6 ticks. You can decide if it's worth it or not. I won't tell you that it's worth it or not. But 6 ticks in crude on 2 contracts is $120. And just imagine, just imagine if you gave up that 6 ticks, that $120 every day for a year. That's a lot. That's a lot. Think of it like that. And Pete says, normally I have a tighter stop. And I know it's true because there's the same trade and there's the tighter stop. And that's what I put a picture in the room. Hey, Pete, I love it. Everything's screaming, nothing in the way. Find a way to take advantage. And then that exit. Because he knows it's a momentum-based trade. He knows it's not a pullback to an area. He knows it. He's willing to exit, and I love that exit. I like that exit so much more. And guys, everybody's at a different spot. Everybody's at a different point. And everybody's going to do it differently, but there's lessons in everything. Like a freight train, just keeps going, blasting through terms. This is a strong trending market. Pete knows it. He takes this one, and again, gets slipped, 8-tick stop out, and then when it hits the mid-band in a strong trending market and all the triggers are below, he says, well, I'll just get in on the reversal bar, and we'll just try and ride that one down again. Great job, Pete. Great trading this morning. Everybody's different, guys. Everybody's going to find a way. You'll find your way. And your way is going to be determined by how you read the indicators, how you identify advantages, and your willingness to either take based on the advantages or to stay on the sidelines because you don't feel like you have what you need to risk your money. And Better Dad did one of my favorite things here. Better Dad said, Mark, page not found, page not found. Mark, I'm just going to flood you with my trades. I'm going to get some feedback. I'm going to talk. 6 for 7 winners. It's hard to not go golfing now and then with that sort of percentage. All right, so Better Dad, let's see what you did. So not a strong top. And I know that it looks like it is. Are you with me, Better Dad? Guys, one of the things about these divergences is these divergences are precise, exact numbers. There is no fudging. There is no range. These are 100% exact. The same are true of these yellow 1-to-1s. So while this one came close, it didn't hit it though, did it? Price didn't reach it. Right, Better Dad? What's the recipe for a termination? Price reaches, triggers below. So let's talk about the difference. Price reaches is pretty precise, isn't it? But let's talk about 2 things real quick. Because there's a good lesson here, Better Dad, and it's one that if you confuse it, it'll mess things up a little bit for you. So when we talk about Fibonacci, Your Fibonacci areas are the result of when you open your software. Here's just a little how-to. I love this. This fascinates me. Your chart is set to go 10 days back. So every swing in the market, Better Dad, every up, every down for 10 days. And let me show you what this looks like. So here's my crude oil large chart. Every day for 10 days, every move, every up, every down, Fibonacci calculations are taken. But that's not just it. Your software also creates higher time frames, lower time frames. It projects forward, it goes backward, it does alternates, retracements. And it's tens of thousands of calculations. And then your software sorts it. Which lines are the most important? Which lines have the highest concentration? So Better Dad, that's when you get your Fibonacci levels. Which is why fibs are areas. And if you're a tick or two off of a fib, I would say you're there. Does that make sense? That's why you see little overruns and stuff like that. But when we talk about divergence highs and lows, and let me show you why. So let me just find a really good picture here. There we go. So this divergence low, it's 70.68. This is the exact price. This is the exact price to the tick that the buyers told the sellers to get bent, that the buyers stole their momentum, reversed the market, and pushed the market up. This is a 100% exact price. And that's why you see this look a lot. Here the sellers said no more. And then when the buyers come back and hit that number where the sellers took over, very often the sellers push again. And the same is true on the buyers, which is why you have to reach an area for it to be. So these are exact. And when it hits it exactly, that's when it qualifies. And the same thing is true with one-to-ones. While blue and red fibs are areas, thousands of calculations, divergence highs and lows are precise 100% exact numbers. And then the same is true, let me get to it real quick, for these yellow one-to-ones. These yellow one-to-ones are a math equation. It is a very precise in-the-moment Fibonacci area that's based off of one calculation. From A to B, when the lower C is created, it projects those one-to-ones. And these are to the tick 100% Fibonacci alternates. This is such a good lesson, Better Dad. So what happens is these divergence highs, where'd it go? There we go. We're going to force it to hit it to the tick. Yellow one-to-ones, we're going to force it to hit it to the tick. But the fibs, we're going to give it just a little bit of a horseshoes and hand grenades approach. Does that make sense? Does that help a little bit? And honestly, it's still a great look. Not going to lie, still a great look. Because they missed it by a tick, but the sellers stole it again, right? No, it's so precise. I love it. And then let's get into it. You've got odds favorable momentum. You know that it's a 50-50. You have strong triggers. Beautiful entry. And perfect management on the way down. It's a great looking trade. One divergence with this look, with those strong triggers, is perfect. I like everything about it, Better Dad. But it's just, you opened the door for a pretty cool lesson. Awesome, you're welcome. All right, high probability trend trade turned into an angry revenge trade. Been there, done that. Odds favorable, for sure. Clear path, all the way. All right. So you caught it late. You already had a reversal bar telling you, let's make it a small risk. Guys, this is where the KISS plan helps new users a lot. The KISS plan says, if you get a reversal bar off the area, reduce your risk. And this could have been like a 4 or 5 tick risk on a trade that failed, a really small loser. You take the full loss, that's okay. And then there's the revenge. Those mother scratchers, they owe me a trade. And apparently they didn't. We've all done it. We've all done it, Better Dad. But could you imagine, instead of taking 2 losers, taking a 4 to 5 tick loser? Because then that anger gene, that Hulk factor doesn't come in so bad. But when you give up 12 ticks twice, it's a little easier to get pissed off. First trade, I love it all day long. I think you could have managed a little more aggressively. And one thing, those were getting wide though. Better Dad smash, exactly. But this is why we don't cry over spilt milk, because look at this. Odds favorable, clear path. Talk to me about your entry. 2 ticks above the mid band. Did you really? It looks weird on your chart. Large chart's perfect. You're in at 42,219. Yeah, look at that. It just printed weird, didn't it? And then it comes right to the mid band, inside of triggers. There's your first target. And then the idea that you can let a second target run. This is a gorgeous trade. Everything picture perfect, all the way up to trouble. And see, that's a good one, Better Dad, because you're a couple ticks below the line that's created through tens of thousands of calculations. You're saying, I know it's an area. Let me get paid a couple ticks before it. No harm, right? Great job. And this is the one that you never miss. Because every now and then it's not going to work. But that was a much bigger winner than the loser you took. And then, I think that's the same trade, isn't it? Looked right, set up, just didn't work. Okay, so that's the exact same trade that we saw. It just didn't work, and I like that you took the time to annotate that. That you said, it's just a cost of doing business. I had momentum. My path was clear. The entry area was clearly defined. It was just a cost of doing business. And the only lesson I could even give you on such a pretty look is don't be afraid to use those reversal bars. You can always re-enter. Strong top, odds favorable, mid-band isn't a factor with that trigger location. Great trade. Just didn't work. And that's the RTY. I don't know the RTY's personality enough. Oh, I like this. Odds favorable, clear path. First one. First one you're in late. Very late. It comes back and scares you. Comes back and scares you again. Hits your first target. The second divergence is printed, and you re-enter. You put a contract back on, and then Better Dad, you get your third divergence. Do you see it? 1, 2, 3 divergence. Yep, but you missed it, and that's where things went south. Great work until the termination, and the small chart told you change was coming. And look at this. All of that action is inside of that. Pretty cool. I like the way you did this. Late for sure. And then there's another entry. There's another rules-based entry. And there's another rules-based entry. And then the third divergence says, hey, we're probably pushing low. Good stuff. Great stuff. All right. I love it when you guys post 4 or 5 pictures. Gives me kind of a stream of consciousness, what it is you're thinking when you look at stuff. All right, Wayne. 1, 2, 3, 4. Strong trending market and a clear path. And then there's that idea. Wayne, the only thing I can give you on this one, You are getting better. I see it every day. I hope you see it. Is once you're on the wrong side of the triggers, there's no telling if, when, or where that market's going to go down. You took the mid band because it's strong trending, which is keep taking the mid band until it doesn't work. Well, there it is. It didn't work. And then divergence prints, and you get odds favorable momentum, and this is beautiful. You recognize that things change direction. You recognize the trend, the momentum, the path, and you just take it right up to that mid band. And gosh, what a great recovery. What a great recovery. One thing, the only thing, you said should have looked at the large triggers, yeah, is when you're coming from the wrong side, Wayne, I know you like that entry where it starts to push back down. Maybe just see how often waiting for the reversal bar might have paid dividends. But this is a great recovery. And I'd give up 140 all day long to grab 300 the other direction. You can't not make money with that. Great job, dude. And then Chili Dog, which means that he has odds favorable momentum on all of his charts. He lets the back of price clear trouble, almost. Gets in, gets out, great exit. Oh, and then you do your heartburn trade, which is just an exhausted market at an outer band. And I hate everything about this one. I'm not going to lie. But it doesn't matter if I like it or not. Odds favorable and clear path. That's a tough trade. But he's trying to catch the move down to the trend trade. And if you just would have taken the trend trade, it went right to where it was supposed to go. Counter trend, guys. Do it if you want, but it distracts you from the higher probability trades sometimes. Chili Dog. Not a Chili Dog. Just to jump the fudge in, Wayne. Chili Dog happens down here when you get through the areas. I know you're trying to do the math, but your math is mistaken. Because I see this a lot. But nice trade. Momentum and path. But the back of the bar didn't clear. And I know that you're doing the equation, the 2-tick thing. I think you're 2 ticks off on your math. Same thing. 2 ticks off. But it works out. But back of the bar for this trade has to clear. And it just hasn't yet. Great trading, Wayne. And guys, there's some of you that I don't worry about. I'll point out what I see, but I know you have a plan. I know you're doing the study. I know you're taking the picture. I'll put my 2 cents in. It's never because I think you're doing something wrong. It's just a, hey, this is what I see. Maybe you didn't see it. Strong trending market. Woke up seeing this. Waited until price cleared the 1-to-1s and just jumped in 6 lot down to the fib. Bob, perfect. That's the perfect one. Back of the bar clears trouble. Price gets away from the decision-making point. Price gets away from the decision-making point. And with that strong trending market, nothing in the way. I mean, in at 74, out at 54. That's a $1,200 trade. Am I doing that math right? 200 times 6? That's a $1,200 trade. Bob, I don't know if you're a golfer, but you should be on the course right now. Great job, dude. Great trade. Momentum and path, guys, that's the core. Once you learn it, you'll be floored at what you can pull off with the software. All right, who's next? We saw that one, talked about it, scrolling down. Who's this Ron C fella? Counter trend. I love this though. You guys want to see something cool? Large chart says up. Large chart has momentum. Large chart has the potential to break. Hey, Mighty Max. I like it. Tell you what, do one more test. Show me that you can write on the chart and show me 2 charts. And then I promise you, I will give you the best feedback you could ever hope for. And a lot of times, to get both charts, you have to click and drag. You've got to click from the left chart to the right chart. But by showing me the one that leads the way and the one that follows, you're going to get the absolute best feedback out of me. So Ron sees a large chart where everything is going up. And my new users are like, don't fight the trend, don't fight momentum, oh my gosh, don't do it. And Ron says, check it out. 3 divergences in the same price range may terminate a trend. Let me wait for the 3rd divergence. Let me just try and grab a quick little something in case bouncy points hold. Ron, it's a pirate trade. It's against everything. But he let the small chart say that he has a fighting chance. I like it. Not mine. I don't have the constitution to fight trends. I just don't have it in me. Some of you do, and you just impress me. I don't have it. I'm a conservative kind of guy. Everybody's different. Hard. Wayne, nothing in the way. Everything says down. Keep selling the mid band until it stops working. You catch it on the way down. Beautiful. And just easy money. Great trade, Wayne. Strong trending markets, guys. 30 bars in the same direction. No reversal bars. Strong trending market. Keep selling the mid band until it stops working. It will stop working eventually. Odds favorable. Clear path. Just jump the fudge in. Make that money. Nice job. JTFI, jump the fudge in. Do it the other way. Odds favorable. Clear path. Jump in with momentum. He knows it's only momentum. Quick profits. $300 in 10 seconds. Beautiful trading. Does everybody see? This is what I want you guys to see. If you get nothing else out of my classroom, if you walk out of here and you don't care about any of the rules that I talk about all day long, this is what I want you to get out of what is taught in this room every day. When you have momentum and a clear path, making money seems to be a whole lot easier. Trades tend to be a whole lot less stressful. And guys, look at that. That is the greatest look ever with nothing in the way. And all he did was jump in. Jump the fudge in. And as long as price doesn't close on the wrong side of those small triggers, it's going up. Wayne knows that. Momentum and path. Nicely done, Wayne. Better Dad. Large chart, gap theory, and you let it finish the gap theory. Look at you taking lessons. So what happens? Termination, odds favorable, and then Lonnie, I don't know if you're still in here. Guys, remember that when price reaches a mid-band and the large triggers are a full bar away, the mid-band's a termination, you've got to let it close the gap. Better Dad killed it. And you said, I'm going to let it roll and then I'm going to get in. I love this. You did this so well. So well. And you didn't fight what was going up. You let them roll. And then you just said, well, shit, everything says down again. Let's go down with it. I mean, picture perfect. And you know what's fun, Better Dad? Not fun. But I would need both hands and a couple toes to count how many times you lost in this gap. And now you're figuring it out. And man, you did it well. Great job. Those have got to be those little confidence boosters, guys. When you take one of the lessons that you got and you begin to execute it and you're like, oh my gosh, that little bit of feedback, that little bit of something got me where I wanted to be. All right. Hello, Mark. Please, I need this help. I'm a bit confused on when exactly to enter so I can enter the exact place. Example, this pullback. I see it. I know it's going to be a pullback. Should I wait for the pullback to finish? Oh, no worries. All right, Roy, are you with me? So large chart has momentum. Large chart has a clear path. What a great look, right? So let's go through it. And I'm not sure why you closed out. I'm going to show you something cool. Let's go to a live market. Let's see if we can make one of these happen. Where was that one that we took earlier? Was it all the way back there? No. All right. I'm gonna circle this one real quick. That was 10:02. Okay, hold on. All right, here we go, Roy. We're going to go through the whole process. Cool? I love this. I'm going to take everything off of my large chart real quick because I really want you to focus on two things on the large chart, and you had it on yours. I want you to focus on momentum and path. So Roy, that's the same look you had, right? And uh-oh, what did I do? My bad. There we go. Does everybody see the large chart with momentum? And the large chart, nothing in the way. You with me so far? And your small chart looks like this, right, Roy? And you're like, oh my gosh, where am I supposed to enter? Where am I supposed to get in? And the cool thing is there's a recipe for it. So when everything looks like this, first thing to do is you're going to wait for the small chart to give you a reversal bar. So with large chart rules met, I will wait for a reversal bar on the small chart. This is the beginning of the pullback. I'm going to give you all of these, Roy, so you're going to have a step-by-step. So there's the first one. All right, so at the time of the reversal bar, we'll just go small chart now. Shape. From the bottom of the triggers to the top of the triggers. Bottom of large triggers to top of large triggers. Both large and synthetic. Just draw the box. Defines where that pullback is most likely to go. Are you with me so far? So we wait for the reversal bar, and then we're going to define where that retracement's most likely to occur, because you know that you're supposed to sell a pullback. All right. So once, and I'll do this, once you define where the retracement is most likely to go, we're going to define where the market is most likely to bounce. So, uh-oh, come on, snag it. Dag nabbit, snag it. There we go. So price may retrace to the top of the triggers, but price is most likely to bounce at an area inside of triggers. So what this does, Roy, is this shows you exactly where that little fight up is most likely to happen. You with me so far? Awesome, awesome. You know what? Let's take that off of there. Let me put this one in there. I'm going to have to put these in the spreadsheet too. Great lesson. And thank you for the question. All right, so your job is to right click and activate a limit order a tick or two below the lowest level of resistance. And this is how you're defining your entry. My limit order is activated a tick or two below the lowest point of resistance because the large chart is screaming down. So what we're doing is we're defining where the market is most likely to retrace. We're pinpointing where the market is most likely to bounce. Whoops, get over there. And then because we have that level of accuracy, it's not working for me. There we go. We're defining and taking that entry just below, and that was an absolute mess. And if it comes up, you're in a short trade right there. And because you know where the market is most likely to bounce, where you know where it's most likely to retrace, my stop goes where the market should not, beyond the retracement zone, beyond the bouncy areas. And this is your high probability trend trade entry. And let's see what happened. And it continues up, and it continues up again. And you start to panic, right, Roy? You're like, it keeps going up. But it's still in the retracement zone. It's still below areas that could create a bounce, right? No fear. Large chart never changed. And it goes up again and again and again. And now you're at the second area that may create a bounce. And the large chart never changed. You still have all your advantages. And then you get that magic reversal bar. And your stop goes from outside of the triggers to a couple ticks above that reversal bar. And with this look, I want you to see, if I circle the top of that retracement, see that it lines up with that tail? And Roy, this is why we don't wait for the pullback and the continuation. We're literally pinpointing where that bounce is most likely to happen, where the market is most likely to continue. And sure enough, things work out well. Does that help a little bit? I love doing these. I love doing these. And what you'll notice, Roy, is if you go through the spreadsheet in the client trades, you can start clicking on these and check it out. Momentum and path, pull back to resistance. And if you click through all of these, momentum and path, pull back to support, what you find is that it's just a pattern. Momentum and path, pull back to resistance. That one didn't even work, but it's still the pattern. So go through that checklist and man, start just killing that pattern. Start recognizing it 100%. And then what happens? Check out your chart. Odds favorable, clear path, reversal bar, pull back a tick below resistance inside of triggers. Roy, do you see your entry right here? Right at the area inside of triggers. And it's so important that you use that language. And then check this out. I'm not done with you yet. So here's the high probability trend trade checklist. It's in the zip file that I give every morning, Roy. But this goes through long and short, exactly how to pinpoint your entry and where your orders go. Burn that into your brain and you'll be set, man. And I can't wait to see some pictures of you nailing entries. Great job, dude. Thank you for asking that question. That's how you get to where you want to be. Is you say, Mark, I need help. This is what I need help with. And guys, I will bend over backwards to make sure you get the help you need. That's what makes this class so awesome, is y'all's willingness to ask a question through a picture. Thank you, Roy. I owe you a beer if I ever meet you. All right, Miss Trina. Better Dad, I don't know if I am. I love what I do. I really do. I love what I do. You've tested it. Strong top, no triggers through. Love it. Odds favorable, great. 50-50, absolutely. Pull back to the area inside of triggers, 100%. Didn't work. Just didn't work, Trina. So let's talk about the idea of 50-50s and a strong top. Something to think about for you guys. And Trina, this is the perfect setup. I would take this loser with you 100 times. Strong top, odds favorable. This look did wonders for this trade right here. But the further you get away from that strong top, doesn't it make sense that the sellers start getting a little sleepy, a little tired? Notice where your triggers were at entry. Your small triggers were above the large triggers. On the complete wrong side, Trina. So you did have the strong top. You didn't have divergence. And yeah, that one's hard to see in the moment because you get so focused on your entry. But that's a big part, because what does it take to break areas typically? It takes momentum. And if I don't have momentum on the small chart, I'm already starting to lose that advantage a little bit. That's the only thing I can notice wrong with this one. Maybe a little tight on the stop, but absolutely beautiful. It's a great read. And I know that your last couple trades haven't worked out for you, and I know that's frustrating, especially when you're learning, but I'm here to tell you that you're doing it right. You are doing it right. Weak top, 50-50, no divergence. There's that strong triggers. Right back to resistance inside of the triggers. Out at the first sign of trouble. Let's get paid. Another 50-50. Pulls back, perfect entry, get paid twice. And then you missed the one lot trade on the pullback. Bob, great trading. 610 on 2 trades. By my count, that has you up over $2,000 today. That's not a bad thing. We still simulator, Bob? You. I have nothing to do with it. Yep, cool. I want to show you guys a picture. Repeat this process every day until you're taking the correct trades. Once you guarantee yourself you can win, trade live money. That's been the plan. So you're looking to go live next week. I like it. Are you going to use a prop firm? Why not? Trade other people's money, right? So Bob, I'm going to tell you, and guys, I love having this conversation with people. What happens is you do these awesome trades and you follow these rules and you adhere to everything when it's on simulator, because who cares if it doesn't work, right? Just a little heads up. The second you go live, you're going to suck a pleat into your chair. because you're going to start watching the money and you're going to stop watching the process. That I think everybody does it their first time live. And I just want to, and maybe if you're thinking about it as you go into it, it's going to set you up to maybe not get that same pitfall that a lot of people get. I would say, based on everything you're showing me, I'm excited for you. All right, Miss Trina. Odds favorable, clear path, 2 ticks above, easiest trade ever, right? 50-50, great entry, no divergence. And then Trina, do you notice how those triggers are strong here? Big difference. And just easy money. What a great couple trades. Nicely done, Miss Trina. And I'll tell you what, when you take that one and then you come back to this one, it really reaffirms trust in the method. I think it really does. It really sets you up to trust the method. And you're killing it. It's so much fun to watch you guys find your groove. It really is. Pete. Pete's all about the groove. Pete says, check it out. Market reversed, weak top, triggers begin to roll, 3 divergences, no more longs. Pete says, hell, I'm going to go the other direction. I can read a chart. And I think you and Ron took the same trade. Took your 10 ticks. And I think the key to this one is there's your term. There's your odds favorable momentum, and you get below everything, and you just ride that momentum down. Pete, this is such an awesome trade. And Wayne says gold is wild, and man, gold is so temperamental. But when everything is screaming up and there's nothing in the way, Wayne says, I'm going to make money. And Wayne, I like that you're shortening your targets on these a little bit. It's just momentum. Momentum is fleeting. Let me get paid. I'll just do this 10 times instead of hoping for $1,000 every trade. Great job. And then strong trending market. Buy the mid-band till it doesn't work. Perfect. There's your second lower divergence. It stopped working. No more long trades. And guys, this is, if you're going to take a mid-band, if you're going to take a mid-band in a strong trending market, remember the key phrase, until it doesn't work, because it's going to stop working eventually. Strong trending markets end eventually. And man, you did that great. Okay, so you've got a set target on your chili dogs. I love it. So here's a question, Wayne. Why would your target on a chili dog be any different than your target on a jump the fudge in? They're both based in the exact same thing. Why would they be managed differently? Ooh, something to think about. You don't have to answer, but that's something to think about. And I know you probably have an answer. Can't take a momentum trade without momentum. Can't take a momentum trade from the wrong side of triggers. Not a momentum trade. This is a trend trade that didn't make it to the mid-band with weak triggers. You have a clear path, you don't have momentum, and your mid-band is right at the base of those large. This is just a trend trade. This is not a momentum trade. You've already had divergence, you're on the wrong side. This is what happens when a momentum trade fails. Turns into a trend trade. Does that make sense? And what you're doing is you're catching momentum on the way up, but it's not momentum yet. We're still inside. It's a great trade. And this would be one of those ones where holding for the next bouncy point might make more sense because it is in fact a trend trade, not a momentum trade. Creating expectations based on the name of the trade. Wayne, it's still great trading all the way around. I feel like when I look at your charts now, I'm not correcting. What I'm trying to do is maybe see something that you didn't see and just offer it. So I love it. I think it's so much fun. Run, termination, reversal. Not the best momentum yet. But everything says up and you find a way to capitalize. Nice job. Not quite momentum yet. Price stealing, smalls, steaming base hit. And that's that idea, guys. As long as you're left to these triggers, it's not coming down. It can't. It's impossible. It's unpossible. Oh, right on, Wayne. I don't worry about your plan. I know your plan's good. I've seen your plan. I've been watching you build your plan for months now. I like all the information. It helps me hold you accountable. Is this Joel? Is this you? Did I read that right? You like that? Joel says, check it out. With odds favorable, with a clear path, I'll take the perfect entry. I will get paid, and I'll go break even. Joel, I'm not sure you could have done it any better. Pete says, I'll take the perfect entry. I'll get paid. I'll go break even. Pete, not sure you could have done it better. Wayne says, let's look at a different market. Couldn't go 3 for 3. Great job, both of you. You said, okay, here we go. Odds favorable, 50-50. You're not showing me your entry over here. It looks like you took this as a momentum trade. Just based on the entry. There wasn't a pullback. So you take that little snap, pow, right off the fib, giddy up, ride that momentum. Nice job. I can't see your entry, but that's my assumption based on the market flow. You know what happens when I assume, guys. Nice one. I got lost. There we go. Uh-oh. Ron said this one made him sweat. Odds favorable, back of the bar clears. Odds favorable, jumps in. Don't fight the large chart. Really hate retracements. It did everything. Oh, right on, Wayne. Did everything this chart said it was going to do. Great hold, Ron. They did. They made you nervous, didn't they? The cool thing is with this look, you had all these areas inside of triggers to help protect a little bit too. It's good for you to sweat every now and then. It's very cleansing. All right, Pete. Really, $7,000 is the best you could do, Pete? Just imagine when you apply yourself. Great job, dude. Guys, look at that. This is why you learn your groove. This is why you pick your patterns. That's outstanding. I mean, that is outstanding. Great job, Pete. Most people can't fathom the idea of making $7,000 in a day. Most people can't wrap their head around it. But guys, I'm telling you, people are showing you that it's possible every day. Just got to find your groove. Odds favorable, 50-50, no divergence and strong triggers makes for an easy trade. Maybe held just a little longer than you needed to with the divergence, Joel. Divergence is that killer, and it absolutely killed it. Great trade again. Nice job. Better Dad. To reinforce the earlier lesson, price hit the divergence. Triggers didn't break it. Strong top. 100% better, Dad. Has anyone noticed that language really becomes important? And once you can associate the words that you need with the look that you need, you'll never ask, is this a strong top? You'll say, price hit the divergence. Triggers didn't break. It reversed the market. That's a strong top. That's the clinical definition. Great job, Better Dad. Can be taught. All of us can be. If you're like me, you're a little more stubborn. Gap, waited for the reversal. It turned ugly. So large triggers were about a full bar away. I'm trying to figure out where we're talking here. 1046, 1046. Better Dad, I'm not sure. Did you choose not to take the short? That's 46. That's 46-ish. So I'm assuming you didn't take the short. Which long? The charts don't jive, if you will. So 1047, this was the long right here, and you chose not to take it because the gap theory was in play. Got you. Nope, I'm good. I love it. Other 1047? Right here? Odds favorable momentum? Clear path? Perfect pullback? Large triggers were not a full bar away? Show me that one on your entry chart. Let's see what that looked like. Because that looks like an awesome trend trade that fits the rules. Will you show me the entry chart on that one? We may have a pretty good lesson there. Man, and I went and praised you for your recognition of the gap theory. Might have to take that back. Almost took this one, but didn't because of divergence. Mid-band outside of the large, weaker triggers, divergence, right at the big fat fib on the large chart. Glad you didn't, because now it's just churning. Decisions are made at key areas. Look at the large chart and look at those decisions being made on the small chart. Pete, doesn't have to be in every trade, right? You're already up $7 grand. Why would you give it back on a maybe? Beautiful, beautiful read. Awesome patience. And demand. Oh, look at that snag it. What a pretty picture. Odds favorable, clear path, right at the mid band, money, money. Rule 3 broken. Yep. And your trigger lines are super wonky, Andy. They shouldn't ever look like this. Right click and reload historical data. Nice trade though. Great management. Great management. Better Dad. Odds favorable. Clear path. Perfect entry. There's your money. And even though price reached a divergence high, I'm going to give it all back. All right, Better Dad. You just turned the golden goose into fried chicken. Isn't that an amazing target? And it hit it to the tick. Cool. So close. It's okay to hit close. This is your money. Take care, Ron. I appreciate the posting. This is your money. If I hit it to the tick, and to be honest with you, if I'm 2 or 3 ticks off of it, my stop's underneath just in case that happens. Just something to think about. But to give back all of that, that's a lot given back. But that's okay. If you're running your management plan and learning it and getting ideas, that's totally cool. Odds favorable, potential to break, divergence on a 50-50, and it got you. What does $200 mean? That's how much you gave back? So when my Christmas present from you sucks this year, it's because of that $200. Thanks a lot, Better Dad. That's okay. You've got to do that every now and then. Guys, you've got to do this stuff. You've got to give it back. You've got to trade into a termination. You've got to get in on the wrong side of triggers. If you don't, you never feel the sting of it. And Better Dad, you're not going to forget that you gave up $200 here. And you're going to be a little more assertive. It's a good look, 50-50 from a strong top. It's that darn divergence again. Not yet. Better Dad, you're a freshman in high school. You're still waiting for hair to grow under your arms. Those guys have been around a while. They graduate next month. Don't try to be them. Be you. Divergence on a 50-50. 92. So this went up so fast, it probably closed you out over here. This happens when the market moves really fast. Better Dad. It might look a little weird. And look at how fast it went. You traded into news, 10 o'clock news. No, maybe not. But you entered at 5:59 and you were out at 17. That market was screaming. But it's in the right spot. The numbers are right. But divergence on a 50-50. Divergence on a 50-50. All right, Bob. Weakening momentum. And Bob says, let me see if there's a fight. And they gave it, and they failed quickly, and then he gets in on the way down. Takes it to the fib. I like that, Bob. Guys, I love this. Ed in here was talking about this pattern. When this chart is screaming in the direction, he's starting to recognize a pattern where you get that little one up, one down, and he's getting in on the way down. Let me let the buyers fight. They fail miserably. I'll assume the sellers are in control. Great job, Bob. I like that one. Strong bottom, no triggers through. Odds favorable. I don't know if those triggers are wide. Would you call those wide triggers, Trina? Or would you say they have the potential to get there? There's the first pullback to an area at the triggers. And then your second entry, 66.50. All right. Your stop's where the market shouldn't go. And nicely done. Not yet. So what you're doing is you're really relying on that quick momentum here. With the divergence, with the termination, the mid-band is a great target, and you did a good job with it. But it's not uncommon with these large triggers still flat and lagging to see the dance, and you handled the dance beautifully. You handled the dance beautifully. But once you're here, once you're below all of this area that could create a bounce, it usually gets pretty close to those triggers. Right? Once you blow through the first retracement zone, very often it finds that second retracement zone. So I like that you waited for the reversal bar, and I like that you knew where the stop goes. It's an ugly look, but you definitely, you pulled it off nicely. And they won't always be pretty. But what you did, and I want to celebrate victories here. What you did is you said, this is where the market's likely to retrace. If I'm going to take this trade, I know where my stop goes. I know where they have to come get me. And it kept you safe. It kept you in the fight. And then you took it up to trouble. Great job. I like it. I like it. It's not the prettiest trend trade ever. but it sure is a good chart read, and it's a great understanding of the basic concepts. All right, so what's a kinda gap? Better, Dad? Kinda gap. It's not really the gap theory. It doesn't really fit any of the rules for the gap theory. But that's, yeah, I'm kind of pregnant. Thanks, Wayne. They're kind of asleep on the surgery table. It's either the gap or it's not, brother. And it's not. And it pulled right back to the mid-band, right in the retracement zone. And I've seen you take this trade 1,000 times. And then when you get up here and trouble starts, I like that this made you nervous, right? Divergence from a 1-to-1. There's your second divergence. Small triggers rolling, large triggers rolling. Things are changing. You can see it changing. I like that little stint right there. I think that was a good one. It's okay that it made you nervous. But the thing is, strong bottom or weak bottom better, Dad? Let's turn this into a lesson. What do you guys think? It doesn't just have to be better, Dad. Strong bottom or weak bottom? It's a weak bottom. And when I have a weak bottom, the mid-band tends to be a little more bouncy. And very often, the mid-band is the first place for that initial fight. So if you traded up to the mid-band, right, you get, well, yeah, trade back to it, and then look for change, and then change came in. And then they did actually bounce back up. Yeah, I think that was an opportunity. It's a good read. But remember, and this goes back to, I want to do this real quick. Because I do believe in language very much. I can have strong triggers. I can have weak triggers. I can't have kinda, sorta, ish triggers. Let it be very absolute. Well, better, Dad, I would bet dollars to donuts that when you've traded into it, it's been a different condition almost every time. You have to find the condition that makes the most sense and has the highest probability. That's what being new is about. The mid-band scares me. Well, what if your triggers aren't a full bar away? Well, it still scares me. But what if it's from a strong bottom, right? So you take the very basics and then you go through. But guys, in the beginning, let it be strong or weak. If it's the triggers, right? If it's a top, let it be strong or weak. Don't let it be kinda strong. Don't let it be sorta weak, right? Keep it very black and white. Areas almost. Weak butt. Weak butt. That's kind of funny. So guys, this is one of the things that you can really do as a brand new user to help pull some of the gray out is force it into being very black and white in the beginning. Force it into being, it's either, where did that picture go? Here we go. It's either momentum or it's not, right? It's either a clear path or it's not. It's either the correct entry or it's not. And then if you take 20 trading days, right, your first 30 days, and you force it to be that black and white, you begin to see the little gray areas in between. You begin to see the little nuances in between. So, better, Dad, probably more lesson than you needed. But let it either be or not be. And accept the consequences, no matter what it is. If your rules are met, take the trade. Try to avoid putting your opinion in there, because so often our opinions are absolutely wrong. So Wayne, letting the small chart show the change that you don't see on the large chart yet. Strong triggers, downtrend. His range chart has already rolled and give odds favorable momentum. His small chart has printed 3 divergences, third one's higher, and provided odds favorable momentum. And damn it, Wayne, you do it perfect. I mean, you do it perfect. I wish Ron were in here because he would give you Here we go. I'll do it. I'll do it for them. You're a freaking pirate. Guys, do you see how the small chart showed the change that you couldn't see on the large chart? But because Wayne's been reading indicators and taking notes, he saw it, he believed in it, and he knew exactly where that market was likely to go. I love everything about that. Arg, indeed. So you guys that are like, I want to be first, I want to be first, I want to be first. Don't. Look at the fight before it was definitive. And then once it was definitive, Wayne capitalized. Man, gold star, high five. Morgan. That is a strong top. That is a 50-50. That is the perfect entry. And that's acceptable losses. How did you get screwed up? Morgan, what was wrong with the trade? Just didn't work out? That happens some days. You know what's interesting though, is this is the first chart that you've shown me. That's acceptable losses. Are the other charts that rules focused? Yeah, happens some days then. Happens some days. Odds favorable, 50-50. Pull back to resistance inside. Quick profits. Divergence prints on a 50-50. Joel, we saw this one. No, I appreciate it. You know what the worst days ever, and this is normal, the worst days ever, I think, are when you follow your plan like your life depends on it, and you get your 20 to 30%. You get your 20 to 30% in the first 2 or 3 trades, and you're just like, oh my gosh. And then you have to make the decision, right, Morgan? Do I keep taking these trades even though they fit the rules, or do I say, you know what, something's not working today, something's not right today, maybe I'll go to the beach, maybe I'll go swing golf clubs, maybe I'll walk the dog. I know one of the guys that does really well with the software, Nexgen Ben. You guys have probably seen him. He jumps in here every now and then. He has a rule. If his first 3 trades lose, he shuts down for the day, even if he followed the rules 100%. Because by the time the 3rd trade loses, he's in too big of a deficit, and he's not willing to risk the 4th. And that's just his thing. It doesn't have to be yours. Some days you're the boot, and some days you're the butt, guys. But with an advantage, you can be the boot more often. Strong bottom, odds favorable. Man. Low probability due to divergence on the small chart. You don't have divergence on the small. What did you do? You went long. So Bob, that divergence is actually the buyers stealing momentum from the sellers. That helped. And the fact that you let it get above and then you have no divergence and you have a perfect pullback from a strong bottom. You're trying to beat yourself up and you didn't even need to. So think about it. And guys, this is a good lesson. But we all do it. What does a pink divergence line mean? Take a page out of Wayne's book. Sellers said no. Stealing your momentum. Does that make sense? What does the blue one mean? Buyers said no. Stealing your momentum. Marlon, I love that. I'm going to use that. Each trade is like a shot of tequila. After 4 trades, your emotions take over. Or your pants fall off. It's one or the other. You pick a fight with a stranger in the room. So this is pretty cool because the thought process is long. And not only did you have the perfect long, but you also have some buyers that keep telling the sellers, go to hell. We're going up. I'm stealing your momentum. You can't have it. I love this, Bob. This is actually better than you gave it credit for. But with no divergence and all that momentum and a clearly defined entry, I love it. Does that make sense? And Wayne's the one that said that. I think I mentioned it once, and he really made it stick. The buyers tried to push up, and the sellers said no. And now look at this. The buyers are trying to push up, and the sellers said no, and the sellers said no, and the sellers said no. And on the small chart, the sellers keep telling the buyers no. Even though the large chart says up, I can use this pattern to see change that I can't see coming on a large chart yet. They did it right here as well, right at 66.17. And where was that? That was right about here, where the large chart is screaming and the seller said, no, we're going to fight, we're going to fight, we're going to fight. And then you had to force them to get below the fight, and then Bob, you nailed that one. Because for every time the seller said no, the buyer said, yeah, but we or the buyer said no. The seller said, we really want to go down. Haven't you looked at the large chart? So, good stuff, man. Great trading. I love a day where we get through all these pictures. Gang fights. That's it. I love a day where you guys post this much. You guys have absolutely crushed it today in regards to posting. Odds favorable, clear path, really. Area inside of triggers. We got 2. Got 1-to-1s. I've also got a mid band. If I don't like that risk, that's the second shot. There we go. Kiss plan in effect. 1, 2, 3, 4, 5. Stops where the market shouldn't go. Reversal bar prints, reduce risk. First target hit, go break even. Let's see what happens. Well, that's a quick $100. Rules based. How do you guys feel about it? Are you comfortable with your chart reads to do it that fast, to talk yourself through it? My rules say, guys, that was, hold on, let's see how long that trade lasted. We entered at 11:35 and 14 seconds. We exited at 11:35 and 24 seconds, guys. That was 10 seconds. I could define my entry and I could work my plan. 10 seconds, and I made $100. It's simulator money. That's your goal. That's why you become a chart reader. That's why you know your plan like the back of your hand, and that's why you don't second guess or create opinions. Kind of fun, right? It almost makes me look like I know what I'm doing. All right, strong bottom, odds favorable. That's a carton of eggs there. $100 is $100, guys. Math people, help me out here. What's $100 10 times a day? What is that, $150, $175 at least, right? No, Wayne, there's no way $100 could ever add up to $1,000. Telling you guys, base hits pay bills. Stop feeling like the market owes you something. All right, so Miss Trina, you did have a strong bottom. And first and foremost, Trina, you see how weird your triggers look? Reload your historical data on that chart. That's a little wrong there. That's weird. But you didn't have a clear path. Did you notice that pink divergence line? Nope. It was there. Which means that you took a 50-50 with two divergences and it pushed you right to your stop out. Do you see it now? Awesome. So close. So close. That's like the most broken termination condition, Trina, ever. That's the one that more people forget about than don't. And it's so important. But great looking entry, great looking stop. You just missed a couple rules. Nicely done. Odds favorable, clear path, perfect entry, quick profits, break even. Better Dad, was this my trade that I took in the room? Did you just take a picture of it and annotate it? There's got to be some copyright infringement there or something, right? Did I? Wasn't paying attention? You want to see something cool, Better Dad? Exact same entry, exact same profits, exact same exit. 100%. 10 seconds. You were able to execute the KISS plan flawlessly. Nice. I thought I was the badass. It turns out that it's you. Great job, dude. Morgan, odds favorable, clear path, perfect entry, and now you're scared. Oh, account liquidated, stock couldn't be more. Crashed down right afterwards anyway. Oh, you got to the end of it, huh? Odds favorable, strong bottom, no divergence, perfect entry, right after the account closure. So one thing that you can do, if you're close, Morgan, and trust me, I've been close and blown out more times than most of you. Trade a one lot, right? Because you know you've only got 85, 75, 84, 75. Well, you only had $100 worth of room on that one before it was blown. Why not trade a one lot? And try to, man, let me capture that $100 real quick. And let me rebuild that cushion. One lots rock. They can. They certainly can. It was the right trade though. Right on. I mean, it was great. It's a great trade, dude. It just didn't work. You just didn't have room for it to work, unfortunately. You ran out of gas before you got there. I love it though. 85.75. Hold on. $86. 85.75. There you go. Guys, we were all within a tick of each other. That's the power of rules. That's the power of trading a pattern. That's the power of not forming opinions, right? Just let it be. It either is or it is not. It's the right trade or it's not. And man, that one worked twice to go up higher. Maybe someone will show me that one. Sorry, that's untitled. And that's Murphy's Law, isn't it, Morgan? Right after the account goes, you're like, shoot, dang heck. Odds favorable, potential to break, no divergence, easy entry, money, money. Great job again, Joel. Know what I've noticed, Joel? I think I've only seen one market out of you. And I've only seen one trade plan. It's been the KISS plan. Has it been easier today? And guys, it sounds like I'm trying to beat the shit out of you sometimes. I never am. But if I see you struggle, I'll almost always say, hey, try something for me, just for grins. Try to follow this plan for 5 days to the letter and see if it doesn't restore your confidence. Try to follow this plan to the letter and see if it doesn't create more wins than losses. Because it usually does. I will always help, guys. It's what I love to do. 3 divergences didn't do much, did it? All right. You guys ready for a little nuance? Did anyone skip this trade because of the 3rd divergence? If I draw that divergence line over, did anyone notice that both the small and the large triggers got above the divergence line? The same way the small and the large triggers get below support, or the same way the small and the large have gotten above this fib? So the same idea for divergence, right? Bob took it. Bob, did you recognize that the count reset? That this was your first divergence, and then once the small and large get above it, that's not your second. It starts over. So what Bob had was 2 divergences. And then Better Dad, are you in here? Did anybody notice that the pivot stop out above created a pivot stop out below, right in an area, right in the retracement zone? How's that for a pattern? And we've talked about that one a few times, right? That's a pretty cool pattern. 2 divergences above, that wasn't even a pivot stop out, typically takes out the previous pivot. If the place that takes it out is the perfect entry, helps you define your entry a little bit. Now we're odds favorable. We're almost broken. There's only 2 divergences. That's a pretty big window. That's the highest point. That's the lowest point. And then who was asking about how do I know divergence is going to print? That negative number flashed. And look at that, guys. 3 divergences in the same price range. My trade just got pulled from the table because that's a termination condition, especially without a clear path. All I'm doing is talking about advantages, guys. That's all I do all day long. Here's my advantage. Here's my strength. Here's my path. Let me define my entry. Where's my risk? Am I willing to take it? My momentum is great. My path isn't clear. 3 divergences says it's even less clear than it looks over here. Now I have to make the decision. Do I say, I don't have a clear path, but... That's the decision you have to make. I don't have a clear path, but I'll jump in, right? I'll go long anyway. Even though without a clear path, I've got $200 per contract risk if I put my stop where the market shouldn't go. Feels like gambling, doesn't it? But you guys see how you're making that decision? Not based on your gut, but rather, I have momentum and I love that. I don't have a clear path. I hate that. I have even less of a clear path. That sucks. But I sure hope it goes up. And guys, if it goes up, guess what? I'm training my brain to not follow rules. I'm training my brain that it's okay to break rules. That it's all right. Strong bottom, 50-50, perfect entry, money, money, pull back. I like it. Stop keeps you safe. Money, money. Target's reached. And that's the last trade. Great job, Bob. Great job. We'll see what it does. Is it going to go up or down from here? I don't know. I never know. That's why I work on advantages. That's why you should work on advantages. It's pretty easy, though, once you understand them, to be able to say this is good and that is good and this is bad, and maybe I do take this trade, but I manage assertively. Maybe I enter on the reversal bar because then my risk is smaller. Because of this strong bottom. Because of that momentum. If I get a reversal bar, well then my risk is established. Does that make sense? I can make the choice, but maybe I wait for a little confirmation. Maybe I say if another divergence prints, I'll exit, which puts my stop right here. I go break even, and I can still find the way to do it. Wayne, that's your trade. Give it a name. Trina, have a great afternoon. It's not a trade, Wayne. It's nothing that I teach. It's a pattern that you recognized and found a way to take advantage of. Does that make sense? I don't know. Ron calls it a pirate. He always goes arg whenever he does it. It's an amazing chart read is what it is. If it's not perfect, you can demand confirmation. Pretty cool, right? Pretty cool. I've got a system running in the background, so you may watch my P&L fluctuate a little bit here and there. Let me turn that off for a minute so you don't have to hear it. Gap theory. Price reached the mid-band, fibs, large triggers weren't a full bar away. You guys remember that look? Better Dad, you know that look, right? All right, guys. Is that it? Are we done? Let me get you...